Let's get into it right now with the former president of the Atlanta Federal Reserve and the CEO and Sam Nunn School of International Affairs at Georgia Tech professor, Dennis Lockhart. Dennis, it's great to have you this morning. Thanks very much for being here. I want to get your take on what's most important here, because we're going through all of these numbers. We've got an employment cost index for the second quarter up 1.3%, higher than the estimate. You've got the core PCE up 0.6%. Higher than the estimate of up 0.5%. How would you assess these numbers?
Well, I think inflation remains persistent and remains elevated at an unacceptable level. And I don't think we should doubt the Fed's commitment to continue to fight that inflationary trend. The month-over-month numbers are most important in the inflation numbers at this time, because we really want to get a sense of a run rate. Is inflation accelerating, decelerating, or flat? My quick and dirty assessment of the numbers that was just presented is that it's pretty flat at the moment. So we're not seeing a worsening inflation situation. We're just not making the progress that we need.
Well, I mean, what's your take on the Fed's ability to handle this, Dennis? Yeah, I thought it was really telling yesterday, Wednesday rather, when Jay Powell gave the press conference about raising rates by 75 basis points, and there was not a word in that press conference about the unwind of the balance sheet. Isn't that a whole nother pressure here? They're talking about raising rates and now being data dependent. We don't know if that means that we get another hike of 50 basis points in September, or 75, or none at all. How did you read Jay Powell's press conference? And do you think they're going to be able to land here and not take the economy further into recession?
I did not take away a dovish kind of conclusion from Powell's press conference. What I saw was a very measured approach, and I think he sort of indicated that the Fed has ended one phase, which was the phase of front-ending or catching up, really. Catching up and front-ending the rate increases and getting to neutral. And starting in September, they'll be in a phase of meeting to meeting, and much more calibrating the rate decision to what they're seeing in the economy, always data dependent, of course. This is important to point out also that the interval between the July meeting and the September meeting is longer than normal. So they'll have a bit more accumulated data by September to really start to try to fine-tune their reaction to what they're seeing in the inflation numbers.
Well, Dennis, up until now, we've had some pretty good job growth, right? 300,000 jobs created in the last report. Mm-hmm. Can we continue to see an economy that has inflationary pressures like what we're seeing this morning in the PCE and still be in recession but still see job growth equal to what we saw last month?
Well, let me say, I'm not one who would say that we are in recession, and I don't think the NBER committee, when they look back at this particular period, is going to call it a recession. If it's a recession, it's a full employment recession, as you point out. Can we continue with the strong employment numbers? Depends a little bit on really the participation rate and how structural this workforce is, or employment market is at this time. And it's a very unusual set of circumstances that have developed. Hot inflation, hot employment, if you will, but relatively low growth. Can that continue? I think the employment market has some structural elements behind the demand for labor, and therefore can continue.
Okay, so you are looking at an economy that has slowed down quite a bit. What would you expect would be the most important move to slow things, to get this economy growing again? Do you see growth?
Well, I think growth is over the horizon. We're in a slowdown. There's no question about that. That's intended by Fed policy. And that slowdown will continue to some extent until the inflationary pressures begin to abate. So I think we should be looking at perhaps a renewal of better growth numbers in 2023, perhaps the second half of 2023. But for the foreseeable future, we're in a slowdown, which is what's necessary to conquer inflation.
So would you expect a contraction for the second half of the year as well?
Well, you have to look under the hood of the GDP numbers that we just saw for the second quarter, and inventory was a major factor as a drag. Fixed investment was also a major factor, which reflects to some extent a slowdown in housing. If you factor that out and look at real final demand, which is really looking at what consumer activity is, it's still growing. It's a growing situation at a low level, but it's still growing.
Okay, well, that's good news. Dennis, good to see you this morning. Thanks very much. Dennis Lockhart joining us this morning on the economic data and the state of the economy.